Good morning. This is Arlan Suderman, Chief Commodities Economist at StoneX. It's 9:30 on March 27th. Taking a look at the markets, we're seeing a little bit of strength led by soy oil prices this morning. Corn and wheat a little bit lower. Overall, these markets are finding an area of comfort, of value, shall we say, ahead of next week's plethora of data that we're going to get. We're going to get the quarterly stocks report on Monday, which is known for its surprises. And considering the big acreage adjustments we saw in the January WASDE report, that raises the prospects that we could have a higher likelihood of some surprises in the stocks report this time around as well. And then the acreage reports, the market has settled on expectations around 94.4 million acres of corn and a little below 84 million acres of soybeans, about 83.8 million acres. But the range of expectations is wide. So there again, it opens the door for some big surprises on just kind of what kind of acreage adjustments we could see. And those surprises could be in either direction. And then the plethora of tariff announcements that are expected next week. We should learn more about the Canada and Mexico 25% tariffs that are currently on pause. Will they go fully into effect? Now, President Trump put up to 25% tariffs on autos that we import late yesterday, and he indicated that if Canada and Mexico try to collaborate to fight this, that he may raise those tariffs even more. So that kind of complicated that story a little bit. He also indicated that if Europe and Canada try to collaborate, he'll do the same thing. So the tariff story is getting more complicated. They are all expected to go into effect on the autos on April 3rd, which is a week from today. April 2nd is when we learn about the reciprocal tariffs, the goal of which is to match whatever a country is charging us. We will charge them with the purpose of negotiating that down, getting them to the negotiating table to negotiate it down. Will that actually happen? That's a big unknown. If it happens, then that's a net positive for economic growth. If it doesn't happen, that's a net negative. So a lot of unknowns and what impact that'll have. And of course, we have the unknowns around the port fees for ships that are either built and or flagged to China, or the ships from fleets that have a portion that are made up of Chinese built ships that go into effect at some point this year, but we don't even have final policy on that. I think we'll end up with a more pragmatic solution before it's all said and done. But the unknown right now, the risk of that being the case to up to 1.5 million in fees certainly has shippers holding back right now, and that's a concern overall. But in the meantime, these markets are chopping sideways. The strength in the soy oil and the soybean market this morning largely led by a Reuters story, and that Reuters story indicating that President Trump, who faced this battle between big oil and the biofuel industry over policy during Trump 1.0, has simply said, you two work it out. But there's a big difference this time around versus Trump 1.0 is some of the big oil companies now have a substantial investment in the biofuel industry. And so they've had a couple of meetings already, and they are currently working things out. Talks thus far are that seem to be circled around holding the ethanol production number around 15 billion gallons, but overall supporting a move toward allowing up to E15. That's not going to result in a 50% increase in ethanol, but it is expected to allow us to gradually work higher with ethanol demand and be supportive there. On the biodiesel and renewable diesel production, right now that mandate is at 3.35 billion gallons, and the talk is that they want to increase that substantially to 4.75 billion, up to 5.5 billion, somewhere in that range. They're still kind of split reportedly on the small refinery exemptions and what to do with the 45Z tax credit program, but the general sense is cautiously optimistic. The sense is, let's get this settled here maybe by the end of March and let the EPA then do something with it over the next 1 to 2 months. So that's providing a boost. I think it's going to be a rocky road. There's going to be some setbacks. There's going to be some surprises in both directions, I think, in here. For this morning, it's higher on the soy oil, and that's supporting soybeans. Tomorrow, the headlines might be the opposite, but for today, it's higher. We were actually getting close enough to start making some biodiesel production profitable again, but this increase in soy oil prices this morning kind of kicks that out of the water until we actually have this firm policy. So overall, as we look at it, mixed. Looking forward to next week's headlines. That's going to be the big driver. Just a plethora of market moving news hitting us next week. We'll finally get out of this holding pattern. And until then, this is Arlan Suderman, Chief Economist, Commodity Economist at StoneX.